Hello everyone. Today we are going to see how to prepare journal and what is journal. It is essential to understand the objective of each stage and the books and records maintained to achieve the objective. Recording of business transaction in a systematic manner is the first step in the accounting process. Each transaction has to be recorded as and when it occurs in chronological order. Everything recorded must be supported by reliable documentary evidence like cash receipts and other vouchers. Recording of business transaction is usually done in journal or subsidiary books. Small firms or sole trader may use the single journal system, and the bigger firms and companies may use subsidiary book system. And we should know what is journal. In the French word, jour means day. Journal therefore means a daily record of business transaction. Journal is a book of primary entry or original entry. All transactions are initially recorded in the journal. The ruling of the journal is such that any business transaction can be analyzed under the heads of debit and credit. A thorough understanding of the principles of debit and credit, which are the basis for journal, is essential for every student of accountancy to get a thorough grasp of the subject. Let's see one problem, simple problem in this journal, how to prepare. Here you can see the problem like journalize the following transaction. Some information given. First, purchased goods for cash rupees 10,000. Then purchased stationery for cash rupees 500. Purchased furniture for cash rupees 3,000. So we can take these three. For the purchase of goods, purchase of stationery and purchase of furniture, how we are going to prepare the journal. Here you can see the specimen for journal entry, that is date, particulars, LF, debit, credit. So in this way we have to prepare. And the first information, cash purchase of goods, it's given in our problem, purchase goods for cash. So for that the entry purchases account data to cash account, and narration also you want to write in this way, being cash purchase of goods. So why we are debiting that purchase account? When we are purchasing goods, the cash goes out of the business. So for that, we are, that is for every debit there will be a corresponding credit. So purchases account data to cash account, debit 10,000, credit 10,000 rupees. And the second transaction they have given, stationery purchased for cash. It's given in our problem. So it's an expenses. Whether it is given as purchase, stationery is a expenses. So we have to debit all expenses and losses, credit all incomes and gains. That is the rule we have to apply here. So debit all expenses in this sense, expenses instead of expenses, we are writing here the stationery account. For that, we are incurring the expenses. So stationery, when we are incurring expenses, the cash goes out of the business. To mention that, we are putting this entry like stationery account data to cash account. And third one is furniture purchased. When the asset purchased in that situation, we have to debit the particular asset account, not a purchase account. Okay. So in this situation, what type of asset is purchased here? Furniture is purchased. So for debit, what comes in? Furniture comes in. When we are purchasing the furniture, cash goes out of the business. So in that, cash goes out. So we are crediting the credit, what goes out? Cash goes out. So furniture account data to cash account, being furniture purchased. So amount, debit and credit, we have to enter 3,000 respectively. Coming to the fourth one, cash sales made is given our problem. So when we are selling the goods, cash comes into the business. So debit, what comes in here? Cash. So cash account data to sales account. The same way, debit 8,000, credit 8,000 rupees. Narration, simply you want to write being goods sold for cash. Coming to the next transaction, what they have given, goods sold to James. It's given simply. It's not mentioned like it's for sales and all. So we should assume it is a credit sales. To whom we have made a credit sales? To James. So James is the debtor for us. So we have to debit the particular name of the debtor James account debtor to sales account. And narration you want to write being goods sold on credit. So debit account 20,000 and credit 20,000 rupees. And sixth one, wages account debtor to cash account, that is wages paid, it's given in our transaction. So in that, what type of expenses they are incurring here? Wages or salary, the company is paying, in that it's expenses for the company. So in that situation, debit all expenses, that rule should apply. So the name of the expenses here, wages. So wages account debtor to cash account being wages paid. So amount 500, 500. So it should be entered in the debit and credit side of the particular journal entry. So this is the simple problem for preparing the journal entry if the transactions have been given. I hope you all understand the simple problem explained today. We shall see the next problem in the next video. Thank you.